The Rebel Capitalist Show.
Chris, can you just back up just a bit here and explain to the people that might not have followed this story what we're referring to with the LME and then I think you're talking about basically the Russian stocks and whatnot and how they could control, like I think Cuppy was talking about, well, if they do this to Russian stocks, and they could also do this to any paper gold contracts you may have as well. Can you explain that a little bit?
Yeah, so very briefly, essentially what if you have volatility, if you have market disturbances on any exchange, it's not unusual for them to halt trading,
Right.
Right, in order to basically let everybody get their head and chill out a bit and kind of have the market readjust, and then they'll open it up for trading, and you will have ordinarily, often if there's a big market move, you might have some people go bust, some leveraged funds and everything else that kind of get washed out. But you can have almost like an orderly breakup. And what they did in this instance was, instead of just having some sort of orderly readjustment within the markets, was they retroactively went and canceled trades that have been placed. And you cannot do that. That is literally a breach of contract, right? And they did so in order to bail out a Chinese billionaire.
Oh, now you're talking about nickel. So okay, I thought you were talking about the Russian stocks.
So nickel. Well, look, this comes into the Russians. It's a similar dynamic.
Okay.
The point behind all of this, so these look, a lot of this is kind of like the specifics of what's taking place in maybe on the LME or with the Russian stocks. If you step back and you look at this from a 40,000-foot view and you say, okay, what is actually going on here? Why are we having all of these little things taking place? What we're kind of seeing is an attack at the very bedrock of Western civilization and what has been built in terms of our infrastructure, our legal infrastructure, the institutions that we've entrusted our capital towards, for custodians, for trustees, for exchanges, and all of the legal infrastructure that holds those together. That is all under attack,
right,
in multiple different avenues. And you could put your tinfoil hat on, you could run down the rabbit hole of the World Economic Forum and the various Hegelian dialectic type of strategies. But again, we don't need to even do that. It is happening, whether it is by chance or whether it is by design, doesn't really matter. You still have to deal with it. And so what happens there is human beings being so flexible and adaptive, we will find different means to solve our problems. What I think is, and I'm seeing this to a certain extent already, is we're going to see a lot of this trade start actually shifting to, and I hate to say it, a place like Shanghai, which is picking up increasing levels and volumes of commodity trades, partly just by the fact that China is a huge commodity consuming country because it's the world's factory. And so long as they don't inflict the same sort of damage, if you will, on market participants on their exchanges, that's where the capital is going to go to. You can set aside your moralistic, ethical views of the CCP. That's just a reality. That's what is taking place and what I think is going to probably accelerate, so long as the alternatives are under attack. And so coming back to the discussion that we had before, which is how do you invest in this sort of environment? It's not just looking at the sectors. You've got to look at those sectors. Like I said, it feels relatively easy to know in which sectors we need to be invested into. Certainly it's easy to know which not to be invested into. If we've got a food crisis coming, we know we can't eat JPEGs. So I'm not going to be investing in NFTs or something like that. But but that the geographical location of assets and the underlying legal security of those assets, and those are all impacted by geopolitical realities. And so we've got to pay a lot of attention to that. We're seeing these negotiations and arrangements being put in place now at warp speed with countries like Russia and India, with China and Russia, with
Saudi Arabia,
Iran and China, and and it's fascinating because we've been talking and writing about this for over 2 years now. These new alliances that always get built under times of economic pressure and hardship, because if you think about how we are as humans when we're under pressure, physically, psychologically, financially, we'll normally retreat initially to a place of safety. So if you, for most of your listeners, they're probably Americans, so they'd know, and we can, we know that within the United States, there's a huge movement of people from often blue states to red. Florida's had one of the largest influxes of people in the last decade. Why? Well, we know why. So to a certain extent, that's people also, it's not just looking for a better life, but it's also retreating to safety, relative safety. And so what you do once you've actually got there, if you're then still attacked, once you're in a place of safety, you defend what your core values are, what it is that you hold dear. So that's happening in the United States now, but it's also on a global basis going to take place, where no man is an island. So you can't, just as no country is sort of an island. You take Japan, they don't have energy security, so they have to, even if they are xenophobic, which they are, they still have to solve their energy problem. So they still will need alliances of some description in order to secure their own system, their own governance, their own political security, and so on and so forth. And so you'll see that it's no surprise that they've had some fairly substantial deals that they've done with Indonesia for coal, in order to secure supplies. And so these sorts of alliances will continue to be, the pressure that's being built and put in place now is going to accelerate those. And so we're seeing that, and the world's bifurcating into, I would say, it largely looks to me like deficit and credits of countries. I mean, if you think about like the wages in the US that exist, they largely exist really as a consequence of dollar supremacy, because manufacturing has been declining for decades, and much of the Western world and the United States in particular has become financialized. That's why there's so many business schools. If you just look at the university education, Asia is pretty much pumping out engineers and scientists, and the West is pumping out business execs, and now increasingly, people with sociology degrees and gender studies and things of this description.
Yeah, so let me just kind of explain that really quick. So what happens, guys, after Bretton Woods is the United States dollar becomes a world reserve currency. The problem there, Triffin's paradox, if you will, or dilemma, is the US is now in charge of supplying the world with those dollars. Well, how do you do that? In order to get the dollars from the United States outside into the global economy, you have to run a trade deficit. And so if you run a trade deficit, that means that you need to, you manufacture less and less and less and less in the United States, and you offshore that manufacturing to more and more countries. Therefore, they are producing the stuff, they're exporting it to the United States, we import it, and then we export those green pieces of paper. And that's been happening since the 1950s. Well, I mean, you could take back to 44, but really substantially since the 1950s. And then we see this globalization process over the last, call it 20, 30 years, that's really kicked that into high gear to a point now where the United States is running the largest trade deficits in history. And the manufacturing, I would argue, here in the United States is at its lowest in history, regardless of what stats you want to look at. The bottom line is we produce a lot less stuff than we used to. We're producing less and less stuff every single year, but yet we are consuming more and more and more. The fact that we are consuming more than we produce means that we are manufacturing less and they are manufacturing more. So that's kind of what gets you up to speed as to what Chris is referring to.
So it's a fantastic little synopsis of it. And it leads into the next thing that is, I think, is worth talking about, which is those savings, those excess savings from creditor nations have gone back into financing that deficit. And it's worked. I mean, it's like anything, it works until it doesn't.
Yeah, meaning they buy treasuries with their reserves, and then that keeps the interest rate down on the treasury. It keeps the interest rate low domestically, which allows us to consume more than we produce.
And at the same time, it allows for their own wage inflation to remain somewhat suppressed. And it allows them to be competitive, continuously competitive in that current structure. That is all now being destroyed.
Yeah.
And the repercussions of it are enormous. They're epic.